The Real Estate Evaluation System, Basic Version. Welcome and thank you for joining me today for the overview presentation. The Real Estate Evaluation System comes in two versions, Basic and Advanced. The Basic version will help a beginner investor to quickly evaluate properties in regards to monthly cash flow, down payment amount needed, and return on investment. The Advanced version will allow an experienced investor to access more fields pertaining to vacancy loss, maintenance fees, management fees, and leveraging money in order to get a clearer overall picture of each property's potential. The Advanced version also allows the input of annual appreciation to predict future growth, as well as the closing costs and land transfer tax, which is calculated automatically based on the purchase price. Lastly, the Advanced version has an income tax deduction section with a complete list of items which can be written off as part of the operating expenses each year. Physical info. Enter the type of property, the address, the asking price, and the appraised value if applicable. Financials. You'll be required to enter the purchase price, the amortization loan term, interest rate for the loan, and down payment. The mortgage will self-generate based on these items. The mortgage insurance is next. Depending on your down payment amount, the insurance percentage is entered here. Note: mortgage insurance rates will be different for an owner-occupied property versus an investment tenant-occupied property, with the latter having higher rates applied. Please speak with a bank or mortgage broker for these figures as they apply to the property. For anything less than 20% as down payment on a purchase, the mortgage insurance fee will always apply and should never be overlooked. Operating expenses. Please enter all monthly expenses, the insurance, property taxes, rentals, condo fees if applicable. Note: the mortgage amount is self-generated based on the financial inputs we just spoke about. Note: the management fees, maintenance fees, vacancy loss, or leverage amounts will be active only in the Advanced version of the Real Estate Evaluation System. Income. To balance operating expenses, we have the income column on the right side of the screen. Please enter all sources of income that the property is generating: rent or rents, garage rental, storage rental, or coin laundry if applicable. Summary. The summary will give you a clear overview of the property's potential as an income property and will help you decide if you should go ahead with the purchase. The cash flow, down payment, closing costs, and annual ROI are displayed here. The purpose of the Real Estate Evaluation System is not to influence you in choosing between a cash flow property versus an equity build-up property. It is simply giving you all the options and information to allow you to make the best decision for each particular property. Whether you prefer a higher cash flow or a higher ROI is totally your choice. By changing the purchase price, the amount of down payment, or the mortgage rate, you'll be able to determine if a property is a valid purchase for you. Always bear in mind that the Real Estate Evaluation System is for evaluation purposes only. Resis.ca does not guarantee that all calculations are accurate. It is not intended to remove the need for professional advice. Always consult a professional financial advisor before making a personal financial decision. Real Estate Evaluation System, Advanced version. The Advanced version of the Real Estate Evaluation System will also allow the tracking of closing costs, other variables such as management fees and vacancy loss, and the 1, the 5, and 10 years ROI. Closing costs. The closing costs are costs due on the closing of the transaction. Legal fees will include disbursements, registration and transfer of deed, registration of mortgage, and title insurance. Note: the land transfer tax amount will be generated based on the purchase price. Note: all these cells have pop-up comments by hovering your mouse over each one for extra clarification. Variables. The variables section will assist you in two ways. First, by allowing you to estimate your monthly costs of borrowing leveraged money, typically from a line of credit, and second, by giving you an overview of things to consider as upcoming or future costs. Note: the concept of leveraging money is one of the most important aspects of real estate investing. Experienced investors will often borrow money and use it as down payment for a property, while paying back just the interest on that loan. Annual appreciation is an assumption of what the market will be like in the future. It can never be predicted. Each city or area is different and will appreciate at a different rate. Please consult your realtor. The tax bracket allows you to enter your current income tax percentage at which you are being taxed at to help in estimating your tax deductions. Building blocks of real estate investment: cash flow, equity buildup, tax benefits, appreciation. Experienced investors will want to know when and how much of their original investment can they expect to see back from the purchased property. The return on investment for 1 year, 5 years, and 10 years is generated, showing a breakdown on all 4 wealth building blocks: cash on cash return, equity buildup, tax savings, and annual appreciation. Check out our demos to learn how the system works and how the down payment, mortgage rate, and mortgage insurance alters the ROI. Always bear in mind that the real estate evaluation system is for evaluation purposes only. Resis.ca does not guarantee that all calculations are accurate. It is not intended to remove the need for professional advice. Always consult a professional financial advisor before making personal financial decisions.